Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Signal Gold Inc. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Kevin Bullock, President, CEO, and Director, and Rob Dufour, Chief Financial Officer of Signal Gold Inc., which trades on the OTCQX Best Market under the symbol SGNLF and on the TSX under the symbol SGNL. Welcome, Kevin and Rob.
Thank you very much, Matt. Very happy to be here at this virtual conference for batteries and precious metals. And we would like to fill people in on what we've accomplished at Signal Gold at our Goldboro project in Nova Scotia, and let you know what we plan to do this year. We will be saying things that are forward-looking. I'll allow people, this is on our website and can be viewed about our forward-looking statements as well. What we're trying to do is develop a historic high-grade district in Goldboro in eastern Nova Scotia. This is an emerging camp in Nova Scotia. There's a lot of growth in our project, laterally and at depth, near surface and underground. And we have developed a very large ground holding over time, which has gone from about 5 square kilometers to 272 square kilometers of land around the particular project itself. We have reserves, open pitable reserves of 1.1 million ounces within 3.1 million ounces of resource, and some very robust feasibility numbers, which Rob will tell you about. We've already received our environmental assessment approval. This was in August of 2022, and we've applied for all major permit applications to get the go-ahead to build the project. The reserves themselves, 100% owned by the company with no royalties, completely unencumbered, and a management team with a track record of building and bringing mines from discovery through to production. I'll turn it over to Rob now to go through the next couple of slides.
Yeah, Goldboro is quickly becoming one of the emerging Canadian gold camps. As Kevin mentioned, we've now consolidated well 127,000 hectares of tremendously prospective land, all underpinned by a 3+ million ounce deposit that we've delineated and growing. And Nova Scotia may not be the province that readily comes to mind when thinking about Canadian gold camps, but the reality is there's been gold mining in Nova Scotia going back 150 years, and in fact the entire southern part of Nova Scotia is known as the Maguma Terrain, and these are these anticlinal systems that continue all along the south of the province, and then you get these deposits. And some of the most recent examples include the Tukoi mine, that Atlantic Gold / St. Barbara mine, and then the Cochrane Hill, and you'll see there's these deposits all along strike. We are at the easternmost end of the province, almost in Cape Breton. By far the largest deposit in the province, and it's the highest grade open pit potential project in eastern Canada. So we're very well situated. In particular, we're 180 kilometers east of Halifax, and really not near any major cities, major towns, which of course, from a permitting perspective, is an advantage. It is called Goldboro, and it's called Goldboro for a reason. As Kevin mentioned, this is all underpinned by a feasibility study that was completed towards the end of 2021 and published in 2022, early 2022. One of the things to bear in mind with these numbers, they are very good. This is our phase 1 feasibility study. This is only on the open pit. There is a sizable upside from the underground. However, 30% of the underground is still inferred, so it is not in here, but there's tremendous upside there. But just looking at the open pit, what we have is an 11+ year mine life, 100,000 ounces of production, with really excellent unit costs, and that's really a function of grade. So on the feasibility study, our operating costs from $775 US, 850 US all-in sustaining costs in the lowest quartile. Now, obviously, since then, there's been inflationary pressure. So those numbers will go up. There's no question. But because of the grade profile, we still think they will be in the lower quartile of any of those mines. And just looking at today's gold price, if you're 2,300 Canadian, you're well over $1 billion NPV after tax.
Thanks, Rob. We've managed to keep the infrastructure on this project within one single watershed, which is very important for the province. We'll have a fully lined tailings storage facility that will host all the tailings and some of the waste, which is potentially acid generating, and therefore the geotextile liner. This is in a remote area, even though it has a lot of infrastructure associated with it as far as roads and power to it. There aren't many people, so we'll have to have an employee accommodation facility. We're using a simple process, CIP, which has been around for 100 years, including a gravity circuit, as we get a lot of gold out in the gravity circuit, which helps with lower cyanide usage for the remainder. We are diverting one public road, which is a gravel road, to still allow access around the property. And we are saving all our organics for closure, and we'll have wastewater and waste management. As Rob said, this is the feasibility numbers were based on the open pit, which can be seen here in long section and cross section. What we're mining here are anticlinal structures, stacked and layered. We found over 80 of them, and those are the hot colors in this particular diagram. They plunge to the east. The fold nose is towards surface, and the limbs go to depth. So we'll be mining those fold noses and some of the limbs within the open pit. But then the opportunity is to mine just the hot colors or just the high-grade zones, which average 6 to 7 grams per ton once we go underground, which is currently not in the feasibility. If we were to go underground, this is what it would look like. It would add another 330 million using the same metrics of NPV to the project, and we'd come off the pits with 4 ramps to go underground and mine underground. So this is from a PEA, a preliminary economic assessment that was done prior to the feasibility, where you can use inferred, but obviously they can't be relied upon until further drilling is carried out. The 2 red circles, very small circles in the middle of this map, is what we started with, and towards Dolliver Mountain, which is a past producer at the same time frame as Goldboro. That was our only concession, that little area around those 2 red circles. Those 2 red circles represent 3 million ounces of resource and 1.1 million ounce of reserve. We've since expanded into the gray and pink areas, so a tremendous increase in land holding. And the dashed lines on the map are the projected fold nose structures on strike of this anticlinal systems. So we've gone from about 7 kilometers of potential strike of the units to over 50. So this gives us a lot of regional exploration work as well. We have carried out some geophysics, and as can be seen in this map by the pink colors, that is highlighting the mineralization, not gold only, but mineralization that gold is associated with near surface. And you can see beyond the current planned pits to the west, the hot pink colors continue to the past producing Dolliver mine, which we're mining the same anticlinal structures as Goldboro. So we believe there's a lot of opportunity. As a matter of fact, there's the same opportunity west of our current resource that there is in our current resource. So that's the upside immediately west within the small first concession that we had. We have started drilling that. This is a very busy map, but what it shows you is multiple intersections of in some cases, very high grade to the west of the current resource that is not currently in the feasibility or our resource. So this is something we'll keep drilling and infilling and put into a 3D model over time over the next year to show potential growth in the deposit. We also stepped out to the Dolliver Mountain area and started working around there to the east. And again, multiple intersections. We haven't hit the wide intersections yet, but we certainly are hitting the multiple intersections, just like the deposit to the east. So a lot of upside immediately around the current resource. And then we are developing targets in and around the new areas that we've received. So when we put those 2 sets of drill results into perspective that I just showed you, those are those 2 boxes, Dolliver Mountain and just west of the pit. And the Dolliver Mountain drilling suggests that that may be the top of the plunge that continues below the pits, and therefore this could go much deeper. Our deepest hole is 550 meters ever drilled. And these systems, the analogs of these types of systems, can go for kilometers at depth. So there's a lot of underground potential and a lot of on-strike potential. So we look forward to continuing our exploration near mine and regionally. This is the regional map. Again, the two very small circles are the planned pits, and just to the west of that, the Dolliver Mountain Mine. That's where we're drilling now. However, the dashed red lines, which represent the hot pink colors of the noses of these systems, you can see here, there's a lot of opportunity that has never been tested or drilled that we're building up as regional targets now. So a lot of opportunity going forward. I'll turn it over to Rob again.
Thanks, Kevin. Just give a little bit of sense of our corporate structure and where we stand right now from a finance perspective and what we underwriting, what we want to do going forward. So we do trade, as was mentioned at the outset, on the TSX and the OTCQX. We have 251 million shares outstanding. Market cap currently around 25 million. We will, that institutional percentage has increased quite significantly over the past 5 years. I think it might have been 8% then, but we've seen increasing interest institutionally given the scale of the project. We just completed a $5 million non-brokered private placement in December. That was all institutional money. And a big part of that was flow-through dollars. And as some of you may know, in Canada, we have this advantageous way to raise money, but it has to be specifically on exploration. But as Kevin has outlined, we have significant targets that we want to look at and drill out. From a liquidity perspective, the number here, $10 million in cash, is at September 30th, but we will end the year with a very similar amount of money. We do have a bridge credit facility in place with a group called Nabari Resources, which is a well-established financing firm in the mineral resources industry. They're not loan to own. What they do is they come in for mezzanine bridge type funding, convertible structures, and they help bridge gaps where maybe equity or maybe hard to get and allow a company to move a project forward. Also important to note, Nabari is actually a major shareholder of BAR as well, and they came in as a shareholder long before that. Under the terms of this facility, we drew down $16 million US. We were able to pay off some existing debt we had at the time, but what most of that was used to do was advance a lot of the detailed engineering and geotechnical work that was required to underpin the permits that we applied for during the year. And these are all the major permits that are required for the project and should set us up to have most major permits in hand this year. That was an important catalyst, we believe, for the project, and that's where that loan is important. That loan is not due to be repaid until February of 2025, but in fact, the company has an option, it's exclusive option to extend that up to a further 12 months into 2026. So it gives us a lot of opportunity in the near term to find ways to look for a financial partner and look to replace that loan with somebody else who can help us move this forward. At this point, all interest is capitalized and we are not paying cash interest until 2025. So the company has the runway it needs to execute on a lot of the programs that Kevin's been outlining. So I indicated market cap and some of the pricing. It's been a challenging bit of time for some of the junior developers and explorers, but that gives an opportunity from a valuation perspective. This is an emerging Canadian gold camp with significant upside potential, over 27,000 hectares of prospective strike length that has not had a lot of modern exploration done. And all that's underpinned by an existing 3.1 million ounce deposit, which is growing, and we have already extended the strike length of that well over 1 kilometer. So there is significant upside to grow the mineral resource already based on the drilling we've done. And again, underpinned by a feasibility study, where costs certainly we'll see some increase on that, but we've seen a very robust and increasing gold price environment, particularly if you're looking in Canadian dollar terms, which only demonstrate the potential of this project. And in the current environment, having permits is key. We already have our environmental permit, and we are progressing very quickly towards the remaining permits. So there's tremendous catalysts in the near term. So right now presents a pretty unique opportunity from a valuation perspective, given this gold market.
Thank you very much, Rob. I think we'll open it now to, we wanted to leave enough time to answer questions. So I think we'll open it now to questions. And what I'll do is I'll read them off as the audience can't see them, and then I'll answer them. So I'm just opening my question box here. And the first one we have is any updates that you can share regarding permitting and financing. So I'll take the first part of that, and then I'll hand it over to Rob about financing. So as far as permitting goes, we've covered a bit of it in the presentation itself, but we have received, as Rob stated already, our permit for our EIA approval, which is the permit that says that this can be built based on our projected discharge into the environment, and it's our environmental approval to go ahead with the project. And that was received in August of 2022. What we've applied for since is the mineral lease, the Crown land lease, the Fisheries Act authorization, which is a federal permit through the DFO, which also allows us to get a Schedule 2 amendment, allowing us to build in the area that we're in on any fish-bearing waters by having offsetting programs. And finally, our industrial approval, which we've sent the application in for, which is really the overlying approval to start construction and mining. Those have all been submitted in August of 2023, and we've received quite positive feedback from the regulators. In the Fisheries Act authorization, we've already had agreement from the DFO that it's a plan that they're happy with to put forward to be discussed with communities, and those letters are going out this week and next to have consultation with the areas that are in question. And so we're very, very far advanced on our permitting process. As far as financing goes, Rob also said it's been a very, very difficult year. I mean, it's been a difficult year for all junior miners. It's been an increasingly difficult year for single asset developers. And there's many reasons for that. But what it does is it creates a situation whereby we've advanced the project, but our market cap has gone down. And in trying to fund the build of a project like this requires a combination of debt and equity. The debt portion, there's a lot of interest on that side, but that doesn't come without equity. So the equity portion becomes something that's quite difficult to maneuver. So we've started the process of looking for a financial or technical partner to advance the project, as opposed to trying to issue equity for the equity portion while we're at our 52-week low. Markets do change, and our strategy for financing this can change, but we don't want to have the type of dilution we would get, even though I don't think the money is available at this point in time. So it's a matter of showing the potential size of the project to keep drilling and showing positive exploration results while we finalize our permitting, which I think will re-rate our company as we move forward. As far as financing for moving forward outside of the project finance, I'll turn it over to Rob to discuss some of the things that we've just recently done.
Yeah, we touched upon earlier. We do want to keep moving forward on those key value drivers, and at this point, in these markets, we really think it's around that growth exploration that's going to demonstrate scale, because that's what's really attracting some of the inbound interest from those potential financing partners. It's already 100,000 ounce producers, but we know from a PEA with some of the underground, this could become a 150,000 ounce producer, and that doesn't even take into account any of the discoveries we've made to the west, which we know the gold continues. The deposit is definitely going to grow. So what we recently did, as I mentioned, a $5 million private placement, which included a lot of those flow-through dollars that enable to do that. And we also had the hard dollar component, which is going to enable us to focus on the permitting. And all that liquidity will give us that runway in the near term to be able to pursue those catalysts.
Thank you, Rob. The next question I have here is, when can we expect the final drill results from Goldboro West drilling near Dolliver Mountain? That's a quick one. We have a few outstanding assays from a few drill holes at Dolliver Mountain that we expect to be able to announce the results of within the next 2 weeks. That isn't the end of it. We are then going to put all that into a 3D model to try and understand the deposit better and get back in drilling again in better weather. So it's the final results from our drilling to date, but we'll get back in there drilling at some point in the future as well. The next question I have here is, how is your relationship with the First Nations and the local community? The short answer is very, very good. But to provide some perspective, we've already signed a mutual benefits agreement with the municipality of the District of Guysborough, which is the community in the area, who are all pro-mining that we've met. There's nobody against a mine being in the area. In fact, it's an old previous producer back in the late 1800s, early 1900s. There's already infrastructure there. Mining is known in the area, and it's quite a remote location. So with the local community, it's great. With the First Nations, there's only one group to deal with in Nova Scotia, and that's the Mi'kmaq of Nova Scotia, who are a fantastic group to deal with, very advanced. We are at the very end of negotiating a mutual benefits agreement with the Mi'kmaq as well, and we have a fantastic relationship with them. I think second to none. And if we go in the area and ask people about it in the Mi'kmaq community or the local community, you'll get positive answers about the mine getting the go ahead. The only complaint we get is what's taking so long, and we're working on getting our permits as hard as we can. The next question I have is, any plan to reduce costs, G&A, during this difficult time? Absolutely, that's what we've been doing. Last year, we sold our assets, which were not in production in Newfoundland, which meant we were able to get to lay off or transfer to another company 96 personnel. We also dismantled our project team, which was working on the detailed engineering for the mine. That was 14 people. So we've really reduced down to a very bare bones team to drive permitting forward and to do exploration, and really not much else on the G&A side. So we have really saved on the G&A costs already. I've got a question here that just says metallurgy, question mark. The metallurgy is very clean. We have arsenopyrite, which is associated with the gold mineralization. The arsenopyrite is not intelluralized with the gold. In other words, the gold is not encapsulated within the arsenopyrite, and it is non-fractory. And our feasibility level metallurgical test work that's been done, a quite significant amount of test work has been done, shows high 90s, high 90% recovery, clean recovery of the gold, and a lot of it, more than 30%, out of gravity alone. So great metallurgy, simple CIL process with a gravity circuit at the beginning of it. On to another question. Atlantic Gold, St. Barbara is currently exploring just east of the Eastern Design pit. Do you think that a JV is an option with them, as they have some cash available and are in search of some more ore feed? In every area of the world, there are clusters of gold deposits around each other, and there's always the opportunity for a roll-up scenario. And we just want to ensure that we're looking at all opportunities to advance this project. So we do think about every opportunity that's available and discuss that with potential partners. So we'll continue to do that. I can't tell you what St. Barbara is thinking. I can tell you what we're doing, and we're actively searching outside of the box for the equity or the non-debt portion of financing to build this project going forward. Take one more question, and let's see. The question is, when do you think you'll have a resource update? That's a good question. We're putting our western drilling just west of the current 2 open pits, or the deposit that we currently have. We're putting the drill results that we've had so far, and we'll finalize that when we get the final drill results that I mentioned earlier, to see if we have a resource developing west of the current 2 pits. And if so, we'll put that together and announce an inferred resource there, and then that'll allow us to pick our infill drill program and continue on that. So with that being said, we're really working hard on permitting and showing size to create value within the project. It's a very difficult market. The key is to keep the project going, show its potential, get through some of the hurdles to get re-rated, and move forward. So I thank everybody for tuning in and viewing this presentation and being part of the Q&A, and we appreciate your support and your input. Have a great day.